and welcome to TQ Talks, where we talk taxes and tax-free living 365. Here are your hosts, Craig White, Sebastian Singh, and Patrick Augustin.
And we're back with another TQ Talks.
Happy to be here, guys. Listen, we're always happy to have people listen to the information we're pitching out there. If you don't know, we are a tax and advisory firm. We help people to reduce their tax liability by giving them great information, legal information,
Legal.
so they can reduce how much they may owe or increase the amount of refund depending on their situation. And of course, from the advisory side, we're trying to look at life insurance or little known strategies that people might not understand or don't have the privy, right? Are privy to, right? So we can help you to create either tax-free or some really heavy pockets towards later on in life and actually now, because there's a bunch of strategies that you
could do right now
to implement today.
So thank you guys for joining us. Welcome back.
Before we get started, Craig mentioned something I want to bring
Well,
up.
hold on, Pat.
I
They don't
know
even know who
where
you are.
he's coming.
You're supposed to
Coming
tell
in hot.
the voice you're
Okay.
hearing
Man,
is
put
Patrick.
down the landing gear. Coming in hot here, Pat.
If you haven't joined us before, I'm
I got
Craig
that
White.
tailwind coming in.
The gentleman that you heard about to beat us up is Patrick Augustin.
Here we go.
And the
Let's
one you
go.
just heard is Sebastian Singh. So honestly, guys, thank you for having or listening with us today. Pat,
Well,
talk to
actually,
me.
no, I don't want to beat everybody up. I don't want to say that because let's just get into the topic.
You sure?
Yeah.
If you have something on your
God.
chest, you can. This is a podcast. You're free.
It's going to come back out.
Say
Let's
it.
let's
It's
just
gonna
get
come back.
rolling.
So this is, again, we're fourth quarter, guys. Tax planning is Pat's big passion. We talk about it. We implement it heavy in this office, and tax planning is all year round. We're doing it 365. We're talking to our clients, and the topic that we're doing today is tax planning strategies to do before the close of the year, before December 31st. We're, again, trying to help you reduce how much taxes you have to pay these people, wonderful IRS, or get back a bigger refund depending on how this thing floats. So we're going to try to hit some of our top things to do. Again, there's a lot that you can do, but hopefully these things may be able to help you on your goals, all right, or with your goals.
And we like to try to get to our clients well before the end of the year, just to make sure they have an idea of what they need to get together, get it going for us, and then be prepared for first quarter that we're going to file everything immediately.
Right.
And by chance, if we don't get to you, you just give us a call, 1-800-413-1456.
Amen. So the first thing on our wonderful list is being treated as an S Corp. When to switch from an LLC. Pat, you want to touch on that?
Well, in
Money,
regards to
money,
that,
money,
to switching in,
money.
once you see yourself making above $40,000 to $50,000 a year, we could consider start to maybe switch over to the S Corp side.
Is that
Definitely have that conversation.
but hold on, is that gross or net?
Gross.
Oh, okay, good.
I would say gross.
I say net. What do you say, Bessie?
Well, I would say it depends, right?
Yeah.
Because if you're grossing 50 and you have $5,000,
amen.
you see what I'm
I
saying?
see.
For example,
Yes.
with
So
the
that's when
previous
the conversations
podcast,
start.
the esthetician had
We're back on that word.
not a lot of expenses.
It's a great word.
Ah,
So
right.
yeah.
Yeah.
So I agree.
So a lot of their income is just raw.
Man, so
Exactly.
So I guess I like that, Bassie. So it depends. So normally we do say around here 40 to 50, and I guess it can be gross or net.
Yeah,
so what
right.
we're saying is if you have enough income to be treated, well, let me back that up. The reason the income is important is because part of the reasons that people switch over from a LLC or whatever it is, partnership, it don't matter,
Right.
to be treated as an S Corp is because they want to reduce the amount of taxes they pay. And part of doing that is by putting yourself on a salary, a reasonable salary. That's what the IRS requests. And when you do that, you help to offset the self-employment tax that comes on the LLC side, which means you try to avoid double taxation.
There you go.
Right. So, that is good. We're not going to go deep into it. We just want to make sure you know.
Call us.
Right. If you're making good money, in your business, again, the numbers Pat pushed out was 40 to 50. You might consider switching your classification before the close of the year to put yourself in a better position. What's next?
Well, back up.
Oh boy.
It might be too late
Ooh, you think so?
because if you do apply it now, it might
Take a
kick
while.
in
Yeah.
for this tax year.
Oh, remember, we can always write the note, Pat. We don't like. You're supposed to do.
but
We're not going to
we
go into the
don't like
rules,
to
though.
do it.
but
we
again,
don't want to go
this
into
is
the
the
rules.
IRS.
Call
they
us,
do
guys.
what they want to do.
Listen.
They're the real gangsters.
Yeah, they are. But listen,
The overall
What Pat-
lesson is to call us.
call us. And what Pat is saying is the legal stuff, because you're supposed to do, I'm not going to tell 3 months and 15 days, whatever. You're
Right.
supposed to do all that stuff. But the bottom line is, guys, they allow it. right? They allow you to do so. And depending on your circumstance, we have the ability to help you get there. So as Bassie said, call us. So let's jump on to the next one. What's the next thing on the list of
Depreciation.
Oh,
we're on
the money.
depreciation.
I love depreciation.
Oh, you could have that one.
It is tedious.
It is, but it's
Tell you that.
it's wonderful. If you don't know what depreciation is, it's basic things is, hey, I buy a product and the IRS using whatever, we're going to use Makers, you guys can look that up, code says this thing has a useful life of X amount of years, 5 years, 3 years, 27 and a half, whatever it is. So if I buy a product, let's make it 5,000 to make it even, and it has a useful life of 5 years, then that means that each year I get to deduct $1,000 off my income
Right.
for the next 5 years. That's how my 5,000 is split. Depreciation is huge because if you are buying a bunch of different products or assets, whatever you want to call them, different equipments or tools, whatever it is, you will have the ability to take that deduction not just for 1 year,
Carry
but for a
it
bunch
forward.
of years.
Yep.
Right. Carry forward. Yeah, there's bonus depreciation. It means you can knock it out in the first year, but you might not want to. There's that tax planning thing
Yes.
again, Patrick, as he talks about it all the time. So depreciation is huge. Again, you should be talking to someone, call us, and we should be able to help you to figure that out. Next on our list, I think, Bass, you want to touch on that one?
Sure. Use your home as a meeting place. You can rent your home from yourself.
From your business,
From
yeah.
your business could rent your home.
Yeah, and we're not,
for up to 14 days a year. And depending on what's going on with your area, your house, you know, the size of your house, things like that, depends on what you can rent it out for. It's just a going rate.
right.
But that can also be another way to get ready for the close of the year.
There you go. Augusta rule is, if you guys want to look that up, that's what it's called. It's a beautiful thing. The business, right, can rent it from your personal. And guess what? You don't have to report the income on your personal side. That's the beauty of that.
That's the beauty.
The business gets the deduction, the personal gets the money, and everyone is happy. Next on there.
But I want to bring up
go,
where
go.
you can, well, not bring up, but just hit up on purchase equipment that you need.
Yeah.
Not that you want, but that you need for your business.
And that makes sense for
That
your
makes
business.
sense for the business.
All right.
Yeah.
Yeah. That's a good one.
Just to offset your expenses and
Yes.
things that for your against your income.
That's the
And
next
again, this is to hopefully build your business to bring in
Yeah,
more
to
income.
bring more money, exactly.
Make sure it's more efficient, whatever it is to benefit your business. If you have extra money, go ahead and buy that equipment before the end of the year.
That is it. So as you said, the next one was to make purchases. Again, we don't want to sit there and tell you spend a whole bunch of money to save money because that seems counterproductive.
Yeah.
But at the end of the day, that's why Pat said need, and he stressed that it might not be a need or necessity for this year, but if you're going to buy it next year anyway,
Exactly.
and you have a lot of money this year, then buy it now to offset the income because you can do it anyway.
Regardless.
Regardless. So that's what we're saying. Planning. God, why we keep saying planning? Sounds so important. Anyway, tax planning is what we're always talking about. And I think we have two more things, but one more thing is collecting money. That's Pat's area of expertise because I do not do that well. And we try to help people to understand. Remember, the IRS is saying that the monies that has to be shown as part of your income has to be available for use during that time frame. So if people say, God, I got a check on December 31st, does it count for January or does it count for December? When was it available for use? That's really what they're seeing. Again,
Right.
you could teeter-totter. So what we're telling you is don't chase the money if you don't have to.
Yeah.
If people owe you money, yeah, you want to collect it. Heck, we want to. As a matter of fact, if anybody listening owes us
Send
money,
it in now.
we want our money, right? We'll
Right.
figure a way to write it off.
We'll figure out the rest.
But truthfully,
We already planned for it.
Right.
if you can avoid it and it will help to not show income, then it's a win for you, right? That's all it is. Again, tax planning. So heck, they might owe you 50 grand, but you already made 490,000. If you don't
Profit.
really need
Right.
that 50,
Get it Jan 2.
thank you. Exactly. January
let's
2nd.
roll that into next year. and
Don't
plan for next
USPS
year.
me 3-day that thing. I don't want that fast, right? So that's what it is, guys. So you have to be intentional and plan for it. And is there anything else? Yes, you can hire your kids. Everybody talks about that.
Oh man,
Gosh, I
It-
know.
and you know what I like is that it's all over social media. But what I don't like
I don't think
is
it's
that
enough, though.
they don't know how
Yeah.
to. So people are just saying, hire your kid, pay him, you're good to go. Talk to your people. Call us. Talk to your tax planners, your consultants. Make sure you know what you're doing. But yeah, you can hire your kid through your business.
Yeah,
that's a touchy subject for me.
yeah.
Shout
I
out
agree.
to Liam regardless.
Yes.
It's one of those cases too where we don't know, and we don't know who to go to get that information. Where you could hire your kids and set them up with a 401k.
Right.
Oh boy, you're back on that one that you saw.
At
How did we
12.
get to that?
That's why I said it's very touchy for
So,
me.
but hold on, Pat.
It's
Could-
very touchy.
We had a 20-minute conversation before.
Let's-
You knew it was coming
But
back up.
but for those who don't know, I want Pat to actually elaborate a little bit. But first, let me say this.
Give him
right?
some
But-
background.
But Pat, before you give them the information, I wanted to touch on, make sure. Guys, hiring a kid is not bad. You can actually write them off up to this standard deduction for that single person. It's 12,000 something, 500, whatever. It went up
850
12,700,
something.
12,800,
Yeah.
whatever. It
Right.
went up. The point is that it's a frustration for a lot of reasons. But on this podcast that we're talking about now, the reason why we're sort of tiptoeing around it is because a lot of times, first of all, people don't even have the income to do that.
Yeah.
That's one. Number two, they don't understand the regulatory parts behind it. So you hire your kids, it's a deduction, that's great. And then they don't understand if you're an S Corp. I'll be detailed. I'll be nice about it on this podcast.
Right.
Yeah.
You pay Medicare and social for that child.
Payroll taxes.
You
Right.
do. You don't have the federal, but you have to pay the other part.
They
The only
are
way you,
an
I'm not going to tell you how to
employee.
get around it.
Yeah.
I'm not going to do that. You have to call us.
Exactly.
All
Telling
right,
you,
but
call us.
make sure you understand what's going on. If you don't want to pay that for the child, there's ways around it. But Pat, if you can give us a backstory of why that was, this is a total different part, but it's very important to
Why
hear.
did it irk you?
Yeah, why did that irk you on the
I'm
kids
watching
situation?
something the other day, and this gentleman.
Yeah, you can give HGTV their credit because it was.
So he's buying his first home, and he's
You said
approved-
mid-20s?
mid-20s,
Uh-huh.
and he was approved for $600,000. So
Wow.
he's making good money, right?
Yep.
So and he's complaining about spending $400,000 on his first house.
Wait, that was the cost of the house, or that was how much he's taking?
That's what he
out?
was looking at.
Oh, okay, got you.
Even though
He was more comfortable at that 400 versus 600.
versus
Okay,
the
so-
six,
right.
So his sister stands in the hallway and says the guy that had a 401k since he was 14.
Wait,
So
wait,
this
I'm sorry.
mid-20-year-old
Yeah.
gentleman
Yeah.
buying a house for $400, got approved for up to
600.
$600, and he has a 401k that
Had.
he
Had
had
a 401k since he was 14.
since he was 14. Wow.
Yes.
Kudos to the parents.
Like we
Whoever set that up, yeah.
most of us, we always say we're playing behind the 8 ball. To
Right.
be honest with you, we're not even on the table.
Yeah.
Yeah, yeah.
Yeah, but we can't be. So this is what
Yeah.
this podcast is. Listen, you need the information. You need real information. You need real guidance. So
Yeah.
kudos to that guy and his family for
his parents.
actually,
Yep.
for doing it and
For
again,
knowing
yes,
and then doing.
and implementing.
Yeah.
Right.
'Cause-
Knowledge plus application equals
Yes.
power.
Yep.
That's the biggest thing. So I hear his complaint. And I'm actually happy he complained. So that's the
Because
other
he's
part,
keeping
right?
that
For real.
mindset
Just 'cause-
about why do I have to?
Right.
Do
Yeah.
I have to spend this money?
Just because I'm approved for 600 doesn't mean I need to spend it. Number one.
Yeah.
Right.
Number two, thank you guys for putting me as 401k, but I got a good job any doggone way.
Yeah.
Why
And I don't
even
wanna-
touch it?
There you
Yep.
go.
Why even touch it?
Yeah. So again, we drifted off of our tax
little bit.
planning strategies.
But that's
it's
part of
important.
the tax plan, right? Is he
It
going to
is.
buy that house? Is he not?
Mm.
Depending on what he has going on, it could benefit.
Wow. Yeah, that could be. That's another part we didn't touch on it. But again, for us, listen, that's our list. There's other things you guys can do before the close of the year.
Call us.
I swear it's like a hotline.
We'll continue reaching out to all our clients,
Oh,
of
my
course.
goodness.
If we miss you or you feel like you want to reach out to us first, please give us a call. Again, I'm going to start now because I see Craig's ready to go. Comment,
I'm enjoying
share,
this.
like, do all that good stuff. If any of this information is beneficial to you, please spread it out throughout our communities.
And we're really happy to have you on here. We hope the information that you got was useful, beneficial to you. Again, we look forward to hearing or having you listen in to us. And any topics you have, let us know.
And happy Thanksgiving.
you
Enjoy
go.
Turkey Day.
Gobble, gobble.
Thank you for listening to TQ Talks. If you enjoyed this show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at TQFinancials.com.